Surprisingly strong U.S. jobs report, boosting the dollar today against the euro and the yen and putting emerging Asian currencies under pressure. Here's Adam Cole, head of Forex Research at RBC Capital Markets. Thanks so much for joining us, Adam. Do you think markets have got ahead of themselves on this U.S. jobs report?
I do, yes, in terms of the implications for Fed policy. Looking at Reuters survey done after the payrolls were released, we now seem to be split pretty much 50-50 in terms of economists expecting the Fed to taper in March or earlier. We still think with a good deal of confidence that the Fed will hang on until March before it starts to taper its asset purchase program. And if those expectations start to diminish, that should unwind some of the dollar strength that we've seen on the back of the payrolls report.
Right, and here in Europe there's plenty to talk about as well. We've got the budget talks, the EU-US trade talks. Where do you think the euro will trade this week?
We think slightly better, partly because we think the background for the dollar is negative on that overshooting on policy expectations, and partly because we think that the evidence we see this week on the activity side, the GDP data, for instance, in the Eurozone, will show that the recovery, while it's weak, is ongoing, and that ongoing recovery results in further narrowing of risk premia, and that in itself, other things being equal, would be euro positive. So I think from both sides, the euro and the dollar side, we see scope for some small gains this week.
Great. So euro, some bias on the upside. How about sterling? We've got the Bank of England inflation report. Are we going to get more good news on the UK economy there?
Yes, or rather we'll get a distillation of the good news that we've had since the last inflation report, and all of that coming together into one place. And bottom line, I guess, is that unemployment does look like it will hit the bank's 7% threshold more quickly than it thought back in August. So that, other things being equal, would point to a slightly earlier start to the tightening cycle in the UK than the bank thought would be the case back in August. So we've had a lot of good news in the UK. The bank will be responding to that and reflecting that in its forecasts.